Good afternoon, everyone, and thank you so much for joining us. This is the TRUP CDO Liquidations Exploiting the Opportunity. Your presenter today will be Bill Harrell from the Burke Group, and I am Jim Kranz from DealVector, and we are pleased to host this seminar. Our goal today is to provide you as much information on the opportunities that exist in potentially purchasing your TRUPs out of CDOs that are being liquidated. But before we get started, I would just like to say I have muted the phone lines just to keep the background noise out of the way for everybody's listening pleasure. And we will be doing a question and answer at the end of the presentation. And feel free to email questions to me at jim.kranz@dealvector.com. The other way that you can post questions if you prefer is on the little Join Me icon bar. There's a little bubble. If you click on that, it'll pull up a chat screen, and you can go ahead and type questions on that chat screen as well. So with that, what I'd like to do is give everybody a minute. There'll be a quiz on this. This is the disclaimers, just kidding, but again, this is, this presentation is for the benefit and use of the recipients, and I won't spend much more time on this, but it is part of the presentation. But what I'd like to do is introduce Bill, and Bill is a co-founder of the Burke Group. His experience includes firms such as Morgan Keegan, FCI, Capital, SunTrust, Robertson Humphrey, and Bank of America. Bill led the bank trust preferred efforts while at SunTrust Robertson Humphrey, so he's very well acquainted with TRUPs and the securitization into CDOs. And he's also a frequent speaker for the FFIEC in Washington, specifically and mergers and acquisitions. So with that, I think what I'd like to do is turn it over to Bill. And Bill, if you want to maybe talk just a little bit about the Burke Group and what you guys do, and talk a little bit about how you've been helping some of the banks out there in the marketplace, then we can move forward.
Sure. Thanks, Jim. And thanks for the introduction, and thanks to everybody on the line. Again, I hope we can get a lot of questions at the end, and look forward to running through this fairly quickly. Our firm, the Burke Group, is a small investment banking firm. We specialize almost solely in community banking, but we do other efforts in the financial services area, the trust preferred being one that has created a number of opportunities over the last couple of years, given the difficulties associated with the banking crisis and the capital structure of banks and this unique issue of having trust preferred in the capital structure being so much of it in the capital structure across a lot of community banks. But I'll kind of leave it at that and look forward to any questions towards the end. Jim, you want to go ahead and switch to next slide and we'll jump in? This page 5 here that you have in front of you gives you a little information on the trust preferred CDO market in general. To give you an idea, when we originally looked at doing trust preferred CDOs back in the early 2000s or late 1999, we expected this market to be about $11 billion, and I think it would be conservative to estimate that there were approximately $30 billion of trust preferred that has been securitized utilizing TRUP CDOs. There continues to be a significant amount of those trust preferred securities or the collateral for these CDOs that are either in default or deferring. So you can see Fitch estimates that to be over $7 billion today. And with 127 issuers still deferring, which means that they have still not defaulted on that trust preferred. Go ahead, the next slide, Jim. So this may be, page 6 here may be background for a lot of folks in the fact that, we did want to touch on, kind of how the trust preferred is structured so that we understand then how it fits in the CDO. If everyone recalls, a bank holding company, and it had to be a bank holding company, would issue subordinated debt to a trust. That statutory business trust is 100% owned by the bank holding company, but then the trust would issue the trust certificates, and that's actually the security that the investor holds. So the trust certificates that you see there kind of on the bottom left are similar in economic and structure to the long-term subordinated debentures issued by the bank holding company. But it is the trust certificate that gets sold to the investor. And the investor really it could be any of 3 different parties. When the trust preferreds first started entering the market, a lot of them went to individuals, went into the retail marketplace, existing shareholders, other high net worth folks. As the market continued to develop, other banks started buying bank trust preferred, and then the securitization market came about around 1999, 2000, and that's what created the collateralized debt obligations. So the CDO is what holds those trust certificates issued by the individual banks. There were several different platforms created, so different companies per se were creating these CDOs. The platform that created the most CDOs was Pretzel, which was done by First Tennessee, FTN Financial. And then there was Alesco, Trapeza, and there were several others. But the key point to remember in this is that the trust certificates were sold to different investors. A lot of them ended up in CDOs. And really what you have to know in order to do anything with the trust preferred is you have to know who that investor is who's holding those trust certificates. And that'll become more apparent as we move on through the presentation. Go ahead, Jim.
Oops, sorry. Jumped one too many.
So basically, what is a CDO? A CDO is a pool of different bank securities. So you see that round figure there. That's our pool. And you'll notice that those generally encompass 25 to 75 different trust preferred securities issued by different banks. That pool had to be granular and it had to be geographically diverse. So that's why you see different states listed there. So once we had the pool of trust preferred securities, then we issued notes that were collateralized by that pool of securities. And those note holders, the way they received principal and interest was called the waterfall. So how the principal and interest flowed over to those note holders was done by the waterfall. That's important because the Class A note holders are generally the ones that may end up driving any of the liquidations of the CDOs, since they are the most senior folks in the waterfall. They, in other words, they receive their principal and interest first. Now, one thing that's important to remember is those note holders are depending on the whole pool of securities as their collateral. So the market value of any of the notes over there is really independent of any individual security that's in the pool. So if you hear that the Class B note traded at pennies on the dollar, that really does not impact or is not relevant to the value of any individual security in that pool. It's more a reflection of where they are in the waterfall and the overall value of that pool. And again, important as we start talking about liquidation and how that impacts the note holders. Go ahead, Jim.
And Bill, I might just add here. The other question that DealVector has received a lot of these issuers of TRUPs is, can I buy my TRUP back from the CDO? And this liquidation issue obviously is an opportunity to do so. But when a CDO is not in default, it's very difficult to do, just because you would need consent from all of these different classes. And finding all of these holders is not always an easy thing to do. And their willingness to let a single security out of that CDO is typically not a positive response. So that's why when we see these liquidations come up and there are potential opportunities that Bill will continue to talk about, that really is the key crux of what we're trying to get to today.
Good point. So what happens when one of these pools goes into liquidation, or why does it go into liquidation? So as you see in the first bullet point, I talk about the required note holders of the CDO. Each CDO, and they are all can be different in the way they're structured, has a class that would be deemed as the required note holders to take any action. The action, I should say, that they would request of the trustee for the CDO, which again is not the trustee on the individual securities, but it's the trustee for the CDO. They would instruct that trustee to take action in a situation like we're talking about with Soloso 2005. That action is being taken by the note holders. They are instructing the trustee to liquidate the CDO because of because of the continuing default in Soloso 2005 and the default on their notes. So the note holders ask the trustee to go in and auction all the collateral. So that pool of 25 to 75 trust preferred securities is going to be auctioned off by a broker-dealer. I don't believe, Jim, and correct me if I'm wrong, but we don't know who that agent is at this point, or that broker-dealer is, that has been deemed to auction off those securities.
That is correct. The last notice I received on the Soloso is just an announcement that it was being liquidated. I've not seen the appointment of the actual liquidation firm, nor a scheduled date for the actual auction itself.
Right. But there are a few things that we do know about that. Any bidders or anybody that wants to own any of that underlying security, since it's a private security, they would have to be an accredited investor. And we believe that the likely bidders are going to be larger funds, since they would have the ability to bid on all or a majority of the collateral. So let's say you have a $300 million CDO, there's $200 million of collateral remaining in the pool. The bidders, the most likely successful bidders, will be the folks that can write the larger check to go ahead and purchase all of the remaining collateral. It's more likely that the liquidation agent or the person running the auction will try or attempt to sell all that collateral to one or very few parties. Once that is done, the proceeds that are received from that auction will then be given to the note holders to satisfy the notes in accordance to the waterfall, in accordance to who gets the principal and accrued interest throughout the waterfall. Anything to add on that, Jim?
No, Bill, I think that's a great coverage. I guess the only thing I might add, it's a little bit of a tangent, but again, I think it's relevant for this audience. The other component of this waterfall that is important to think about is when a bank is deferring its interest payment and it hits that 5-year deferral ending point and they end up defaulting on the interest payments, most of the indentures then kind of give the power to the senior class. And so one of the things that we've seen is there's a couple of very active Class A investors that when that default occurs, what they've been doing is taking legal action against those banks. And so that's, it's a little bit off topic on the liquidation, but again, I think it's just something that's important for folks to keep in mind if you are still deferring on your interest, that, as that default date approaches, it's important to reach out and communicate, because those Class A investors then typically get a lot more power. So, that's one type of default. Bill, I think the other thing that you've mentioned is, that there's a default on the CDO. In the indenture, there are different specifications for the specific CDO, and when that goes into default, then that can also drive some of these liquidations and the opportunity to buy securities back.
Yeah, it's a great point, Jim. I mean, the requisite note holders or the required note holders of the CDO in some instances have designated, even when there's not a collateral manager for the CDO, have designated parties to take action on their behalf. And those parties have threatened involuntary bankruptcy on a number of different banks across the nation.
Yep. And we've also had success in working with banks that are coming up on a potential default of their interest payment in getting consent waivers passed. Sometimes they're looking to raise capital, or they've raised capital, and the fear is the investors don't want to put money into the bank until they get a consent waiver from the investors saying that they won't force bankruptcy as soon as that money goes in and just take all of that cash. So again, there's a variety of different things that go on beyond just a liquidation and these types of situations. So happy to help with those and field questions if people have questions on that as we progress. Anything else on this slide, Bill?
No, go ahead. So we've talked about the CDOs and kind of why they end up in liquidation mode. So the question is then, how do we go about getting a security back if I have issued trust preferred, it's owned by a CDO, and that CDO is in liquidation? It actually doesn't necessarily have to be in liquidation for you to try and get your security back. In some instances, there is a collateral manager who kind of manages the pool in conjunction with the trustee. So if there is not a collateral manager, then the trustee can be directed by the required note holders to actually liquidate the pool, and then it's the trustee that then hires a broker-dealer to go out and auction the securities. Again, we talked about how the auction is probably going to be successful with larger funds. Now, that doesn't necessarily mean you're not going to get your security back. If these larger funds end up with the securities, in other words, they're the successful bidder in the auction, it's important to continue to follow that, because then you have the opportunity to get that security back from those larger funds that ended up being a successful bidder in the auction. So it's important to kind of follow the liquidation of the CDO, because then once it's liquidated, whoever ends up owning that security, that's who you would then work with to try and get your security back. Now, alternatively, if there's a collateral manager, that's who you're going to be talking to. And it really just depends on what platform, whether it was the Pretzel platform, the Alesco platform, Trapeza. It really depends on what platform it is then to determine if there's a collateral manager. Even if there is a collateral manager, that collateral manager has to be willing and able to negotiate with you. So while there's a collateral manager, they may want to, but it's important to understand how their collateral management agreement works to determine whether or not they're actually able to negotiate with you on your individual security. So just a couple of different things that you have to consider when they're in liquidation or the CDO has a collateral manager and you're looking for your security. Obviously, number two, the regulatory issues are numerous to consider. The situation each individual bank is in, each individual, if they're under a consent order, which is probably why they're deferring on the trust preferred, those how that consent order reads, what you're able to do in accordance with that consent order, because you are talking about redeeming a Tier 1 instrument, it's important to understand how your existing consent order impacts your ability to refi or redeem that security. Now, even if the consent order doesn't allow it, if number three, if there is capital available to purchase it outside the existing holding company, it's important. Possibly a group of shareholders or a new shareholder could actually purchase that security. It would not impact the holding company at all. These individuals would be owning that security, and keep in mind there's ownership issues to consider from a Federal Reserve standpoint. But if we're basically trying to get that security in friendly hands, if we're going to try and do something with a restructuring of debt at the holding company, we want that security in friendly hands. Obviously, number four, you wouldn't necessarily pursue this unless there was a profitable future for the subsidiary bank. In other words, you would not want to buy that security unless you knew that there was a plan in place to make sure that the bank that has been deferring on that security has a future ahead of them. And a couple of things that you have to consider when you're doing that, obviously you've got to figure out a price, number five here, but what different things to consider when you're determining what that price is, if you've got existing shareholders buying or if it's a new shareholder, they may have different views of what that security is worth. These are just some of the things that you might want to consider. Obviously, you want to consider whether or not there's a senior creditor ahead of you. And buying a junior subordinated security with very limited rights, if you've got a senior creditor ahead of you, you better understand who that senior creditor is and what their attitude towards the bank's future will be. There's another thing that I think a lot of the banks that have been deferring should consider is that if you got the security back at a meaningful discount or any discount, really, is there an opportunity to use that security and its discounted value as a carrot and an incentive to attract additional capital to the bank? In other words, could somebody investing new money in the bank participate in the ownership of that discounted security? And I think that's something that everybody should consider if there's any situation to get these securities back at a discount and the bank needs additional capital. That example actually applies even if the bank is healthy and you have an opportunity to get the security back. If the bank needs additional capital and you can get the security back at a discount, even if you're a healthy institution and you've been paying on it, that's really an opportunity to be able to raise additional capital and incentivize additional capital to be attracted to the bank. Anything to add on that, Jim?
No, I think that covers it well. This is definitely your forte. Ours is the communication aspect. So I'll leave this part to you.
Okay. So just to summarize, and again, we'll look forward to any questions. Each situation is very unique, really dependent upon who owns your trust certificates. In other words, your trust preferred, that security, where did it end up? Did it end up in an individual's hands? Did it end up in another bank's hands? Did it end up in a CDO? Or is it a combination of all of those? Very important to know in order to determine what strategy you would take. Keep in mind, just because you originally sold the security to somebody, let's say you sold $10 million of securities to someone, that doesn't mean they didn't resell all or a portion of that to someone else. So it was in the early 2000s, there was a number of folks that would initially purchase a security and then sold a portion of it to another CDO platform. So let's say you sold yours to Pretzel. It doesn't mean they all stayed at Pretzel. They could have gone somewhere else. So second major issue is that creditor then, that CDO or that bank or that individual willing and able to work with you. Again, depends on if there's a collateral manager, depends on the status of the trust preferred or status of the CDO. And then lastly, obviously, we all need to consider what the reaction of your regulator would be based on the situation. Important to understand what, if any, consent order says and how that would impact the action. So again, this applies for banks in deferral. It applies for healthy institutions that might have their security in a CDO that has been in default. You know, your trust preferred security, you could have been paying on it all the time, but that doesn't mean the pool of securities has not created, or the performance of the pool has not created a default and then created a potential liquidation of the CDO. So all of these things are good things to consider, but the key is to where that is. That's really all the comments I have. Would like to open it up for questions, but again, I appreciate everybody's time. And if you have any questions, I believe our contact information is on the last page, Jim's, as well as the folks here at the Burke Group. So we'd be happy to answer any questions now or field any if you want to give us a call. Jim, you want to open it up?
Sure. So again, for questions, please feel free to either email them to me at jim.kranz@dealvector.com, or on the Join Me menu bar, there's a little bubble. If you click on that, you can write something in a chat as well. And in fact, Bill has written, we found it is very difficult to work with the CDO trustee and or collateral manager unless you have access to the CDO trust indenture, because you have no idea what authority of the trustee and or collateral manager has. Also, in many cases, the trustee sees their role as purely administrative for fear of lawsuit on the part of investors for actions that may not be in their best interest. It also really helps to know that the CDO investors, who the CDO investors are, as they can apply pressure to the trustee and collateral manager. So, Bill, I think a couple of things. One, great point. Thank you for sharing that information. But Bill, maybe you can address a little bit. Do you know of an easy way or a good way to get a hold of the indenture?
Well, interestingly, I've been able to find a number of indentures just on Google, but a lot of times it doesn't necessarily help to read them because of the complexity involved. I mean, these are documents that can be upwards of 300 pages, and a lot of times they won't necessarily include the collateral management agreement if there's a collateral manager. I agree with the point that the CDO trustees are not that excited about taking action because they really are charged, their role is very passive. So it's a matter of trying to figure out what you want to do, a lot of times you have to get to the requisite note holders or the required note holders. The CDO or the indenture, which you referenced in your question, is really going to be what determines what the required holders are. And, we've worked with DealVector to try and solicit the required note holders directly. And that's really a key thing, because before DealVector, the ability to do that was impossible. But at least through DealVector, we now have an option of trying to solicit those required note holders directly.
Yep, and I would add to that we do have quite a few CDO holders on the system, and we have had good luck in locating them. One of the key advantages, obviously, is they don't want to give their identity out, and that's one of the things that DealVector has done, is allow them to respond and receive communications from you, the issuers, but yet remain identity protected, and that's assisted in sending out further communications.
And let me just emphasize that even if you had the indenture, it really, what is more or greater determinant of your strategy is going to be whether or not there's a collateral manager, and then figuring out if there is not a collateral manager and you can't talk with them, then it's a matter of figuring out how to contact and what process you need to do to work through the required note holders, or requisite note holders is a lot of times the term that is defined in that indenture. Great point, though, about the trustee role.
Yeah. Another question, Bill, is if a bank is unable in the liquidation to purchase their securities back, is that kind of the end of the situation, or are there things that a bank might do to still be able to get their paper back, even if they didn't get it in the initial auction?
Yeah, great question, Jim. I think it's still a real opportunity, because you need to follow that auction, find out who ended up owning it. There's probably only a limited number of funds that are going to be bidding on these pools, because there's a limited number of folks that kind of specialize in CDOs and in trust preferred, or banking. So once those bidders are successful and they own the individual security, they're highly motivated to work with the underlying issuers, highly motivated to work with the bank that issued the trust preferred to try and then liquidate their position. So I still think it's a great opportunity, even if you don't get it through the CDO liquidation.
Great. The next question I had is, how do you get a copy of this presentation? I have to apologize for our technical glitch this morning, and I know some of you dialed in late and had to call us for that. That is my fault. I apologize. We did record this session, and I will be posting it with a link. It'll take me probably 24 to 48 hours to get it posted. And if I have some of your names, but if you shoot me an email, I'll make sure that you get it. I will also be sending the link to the broader list that we invited for the web seminar, so you should get it that way as well. But again, feel free to drop me an email, and I'll be happy to make sure that you do get that link. There was another comment that it would be a huge benefit for DealVector to get a hold of the CDO docs and post them as a service on DealVector. Great point. We would love to do that, and that is actually in our development plan to build a document repository. So when you do log into DealVector and you see that CDO, if we had any materials on it, it would be listed there. So that is under development. we'll continue to work on that and try to get as many documents as we can, but, we appreciate your suggestion and support. Are there any other questions, either via the chat button on the Join Me button, or again via email to me, jim.grant@dealvector.com? If not, I thank everybody for their time today. Again,
Jim, thank you for hosting also.
My pleasure. And if you have further questions, please feel free to reach out to either Bill or myself. We're happy to help in any way that we can. One small plug, again, DealVector is free to register and use, so if you're not a member and you have some issues around your trust preferreds, I would encourage you to register and take advantage of the community that's out there, and have conversations with other folks that are in the same situation potentially, and or even the holders of the CDOs that your trust preferreds were issued into. With that, I'll conclude our session today, and thank you so much for joining. And again, I will be sending out the link for the recorded presentation here probably in the next 2 days. Thanks very much, and enjoy the rest of your day.
Thank you.